It's about that time of day again. My name is Joseph. It's Thursday evening, April the 6th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish with a spike in channel, which tells us to use the battle zone for buying opportunities tomorrow. But watch closely. We've got two big levels of resistance overhead that may just cause some trouble if this price tries to push higher. The S&P is bullish and trying to retest the wedge target from earlier today, but we're running out of open space above us. So the plan is to look for traps and successful breakout pullbacks to new highs tomorrow. Gold is bearish and trading inside a range, which tells us to look for two possible scenarios after Friday's non-farm payroll report. And of course, the euro's bearish, trying to finish off a measured move tomorrow. But two levels of support are telling us to look for traps up in the battle zone or a breakout pullback below the triangle tomorrow. The FDAX is bullish with a spike in channel this evening, but we have a major resistance level in our way, so the bulls will be watching to see one of two scenarios develop tomorrow. Speaking of tomorrow, tomorrow's non-farm Friday, which means we have some of the biggest news of the month only 12 hours away. This news is a big variable for Friday's session, but that won't stop us from planning our trades so we can trade our plan as we finish up what has been a great first week of the month of April. Before I jump into the charts, though, and put the plan together for tomorrow, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet of the full-length version on our YouTube channel. Not to worry, there's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Right below the video tonight, lower left-hand corner. Many different ways to follow me on social media. I'm always posting important charts, links, and updates throughout the day. Grab those charts. Have those charts ready on your computer for tomorrow. All the charts you see me using in tonight's video, that's right, you can download those charts and have them ready for tomorrow by following that link below the video on the blog. And please don't forget to grab your free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. If you're not an advanced member here at School of Trade, grab that free pass in the upper right-hand corner and come join me as a guest in the trade room. Don't forget, if you're brand new, we got a great frequently asked questions page here on our blog as well. Get the who, what, where, when, and why. And I'm always here standing by to answer all your questions. Use that live support tool on the right-hand side if you need any help along the way. Guys and gals, been a great first week of the month of April. We're only as good as our next trade, though. Let's get ready for tomorrow. Tomorrow's non-farm Friday. It's the first Friday of the month. Of course, the way the rule goes, it's the first Friday of the month as long as the first day of the month isn't a Friday, right? So here we are, the first full week of the month of April. Can't believe we're already talking about the month of April right now. This year is flying right by. This is the first Friday of the month. First Friday of the month, as long as the first day of the month isn't a Friday, we're going to get that non-farm payroll report. Now, don't forget, we saw a blistering number at 8:30 a.m. Eastern Time on Wednesday. A very strong ADP report came out on Wednesday, so we're expecting another strong report tomorrow for the non-farm payroll number. We get a lot of minor news on the schedule tomorrow morning, but none of it matters. All eyes and ears will be on that employment number tomorrow at 8:30 a.m. Eastern Time. With that said, it's very important that you remember tomorrow is a Friday, so Fridays are always early in, early out. I never want to be getting into new positions after 11 a.m. Eastern Time on Friday morning, so watch the time closely. Now, tomorrow is even more important that we keep our eyes and ears open. You can usually expect one of two scenarios after the news comes out tomorrow at 8:30 a.m. Now, backing up for a moment, it's also very important that you remember that we do expect this to be very low volume before the news comes out. Most of that comes from the fact that large lot traders, institutional traders, people who have client funds under control, right? People who can't risk, right, being trapped in this trade, in a trade or in a position tomorrow after the news comes out. We do expect the markets to be relatively quiet here in the overnight session. Usually what happens is you see the markets trading sideways or slightly fluttering higher or lower. Be very careful before the news comes out tomorrow as far as getting into new positions, and make sure you protect yourself against any drastic changes in price after the news comes out tomorrow. Now, after 8:30 a.m. tomorrow morning, we expect one of two scenarios. If the market if the news comes out and it comes out as expected, we have already known about what the expectations are since Wednesday's ADP report, excuse me. So because we've known what the number's likely to be since Wednesday, it's likely that these markets have already priced in that news. What happens is if we know what we're expecting on Friday, right, subconsciously we start placing our bets right ahead of that news, and price manifests and prices in right that news report. So if we see a news report tomorrow morning that is within expectations, the market will usually move quite slowly. It'll take about 10-15 minutes to make sure everything's okay, gather its balance, and then find a new trend direction. So one scenario is tomorrow is after the news comes out, you may see no reaction whatsoever. And the reason for that is because, again, we've known about this news report all week. We had a good heads up on Wednesday about what the number would be like. These markets have likely already priced in the news if it comes out as expected. Now, the flip side of that, the second scenario, as you can probably assume, is where the market starts to wild whip and very violent, fast-moving price action. The reason why this happens, right, is because if the news comes out outside of expectations, now traders, professionals who are trading long-term right strategies, they have A, B, and C plan. Right? So if you were managing client funds or if you were trading a longer-term swing strategy, you would want to have three different variables going in for tomorrow. Right? You'd have strategy A, which already has it all priced in. Strategy B, right, if the market or if the news comes out higher than expected. Or you'd have strategy C, and that would be if the news comes out lower than expected. Right? If you were holding a position into this news, you're benefiting from the market being priced in. If news comes out as expected, the market again will be very relatively quiet, considering the big news event we get, right? Relatively quiet. Give it 10 or 15 minutes, let it gather its thoughts, and it will make its move from there. If the market, or should I say, if the news comes out higher or lower, that will force traders now to abandon strategy A and, of course, execute B or C. That's where the violence comes in. That's where the excessive volatility, the illiquidity, the violent price action comes in, and that too will usually last about 10, maybe 15 minutes. The moral of the story is whether or not this is slow or fast tomorrow after the news comes out, whether or not the news is within or outside of expectations tomorrow, we want to give it about 10 minutes after that news comes out. Once that news comes out, whether it's very, very fast or very, very slow, right, we'll quickly see a new direction or a continuation of the current direction, and we want to wait for that evidence. One last thing about tomorrow's Non-Farm Friday. I'm going to do my very best tonight to give you a plan for tomorrow, but please be aware, all hell can break loose tomorrow morning and be very unreliable before the news and get very, very violent after the news. Tomorrow is not a day to be increasing your position size. Tomorrow is not a day to be going from your simulated practicing right to the first time on your live account. Tomorrow's not the day to be taking increased risk. Tomorrow is a day to protect your capital. Most professional traders know that Friday's non-farm payroll number is going to have a lot of gamblers in the market and professionals out of the market. It's like driving an automobile at 2 o'clock in the morning, right? Not a lot of good stuff happens. So be very careful tomorrow. And don't forget, next Monday is what we call Reaction Monday. It's usually a much easier day to trade than Friday's non-farm payrolls. So some words of caution going into tomorrow's session, especially for traders out there who haven't seen more than 3 or 4 of these reports. Don't be surprised if it moves very slowly or very quickly. And again, use caution. Tomorrow's a day to use extra caution, trade smaller size, right? Early in, early out for a Friday. And I'm expecting to have a great day. We got to wait for that news to come out and then play it from there. So promise me no selling into a runaway bull market, right? No buying into a collapsing market. Just because I give you guys some support and resistance levels here tonight, promise me, right, you won't make those mental mistakes by being a gambler tomorrow, right, and waiting for that news and then looking for confirmation. With that said, I'll get off my soapbox now. Hopefully I've scared you a little bit there because, again, it is a very, very important scenario to protect your capital on a non-farm Friday. Going forward, we got crude, S&P, gold, euro, and FDAX this evening. Crude is bullish with a spike in channel, trading at the double up just a few pennies below yesterday's high, and of course ahead of tomorrow's non-farm payroll report. The spike in channel tells us to look for traps and failures below the low of that channel, and the two levels of resistance overhead pose a serious concern for the bulls. We'd love to see this price pull back off these highs, dig into that battle zone so we can buy low. But if this price pushes higher, we got to see some serious strength and a successful breakout pullback if we're going to have the confidence in a move higher tomorrow. Great chart here tonight. As you can see, the market's pretty simple, right? We talked about this last night on the newsletter. We knew the sellers had gotten pretty much every drop of that move, and we were expecting to see a correction higher today. We got that correction. We got the correction on strength. Buyers hold the pullback, and they're off to the races. For the moment we came in this morning, we knew this market had turned from bearish to bullish. We talked about this last night on the newsletter. With that said, that strong move up turns into a spike in channel. And there's a few different ways you could look at this. I looked at this a few times. You could call this a spike in range. A spike in channel does fit well. I wish it would fit a little bit better with some of those midlines there, but we'll do what we can do with what we have this evening. So, calling it a bull spike in channel right now, whenever we have a spike in channel, your number one priority right now is to stay patient and watch those prior swings, because you know a correction will always be the most reliable way to trade a spike in channel, that nice deep correction. So that's what buyers are looking for. Buyers would love to buy down in that battle zone. You could also look at this as a short-term trading range. If this is your range, spike in range, where do you want to buy? You want to buy below the low of that range. So whether or not you want to call this a spike in range or a spike in channel, it doesn't really matter to me. I want to get this price down so we can buy it back up. Now, speaking of price going higher, what if price does go higher? Well, first of all, we have that double up target overhead at 51.77. It's easy to see that that was the objective for the buyers today. Also, don't forget about that prior day high. This is relatively important. We don't really worry about these very often, right? But a prior day high, remember, this is coming off of that inventory collapse from yesterday. So the buyers definitely have a bone to pick right now with those bears, and they love to retest that prior day high. So we can definitely assume they're going to keep trying to get that prior day high achieved. But remember, yesterday's high is going to be a big psychological level. So even if we do see this market spike up, test that prior day high, it may easily get pulled back into that range if buyers aren't quite comfortable to keep buying high. So what's the best scenario for tomorrow? Again, we talked about this earlier. We'd like to see the price pull back, go into that battle zone, trap low, right, and gives a chance to buy low. If the price pushes higher, be very careful about this area right in here. What I'd like to see is a strong breakout and then a fake out breakout pullback trying to buy low. The bottom line is I want to see a lot of strength. I want to get that moving average up above that double up and then look for that buying opportunity with the proper entry trigger. Don't forget, we teach all the entry triggers. I go over all the technicals in the intermediate course. In the advanced classes here at School of Trade, we talk about all the specific entry triggers, right? Our pullbacks, strengths, failures, traps, all the different ways that we enter into this market. The bottom line, though, is be very careful about a little head fake and back in, head fake and back in. I would expect to see this prior day high to act as short-term resistance. If it can get us a nice jump up, then we can see the proof that we need, right, that buyers want to take this higher, look for that moving average through. And what I was going to do is, whenever we see a break high or a breakout, right, through a range, I always want to make sure I avoid that trap, right? That happens when price breaks out. It'll usually collapse back in. I'm looking for a trap low here, right, to play against it, using that trend line, using that moving average. Again, the most important thing, though, right now is going to be getting that proof going through that prior high of day. We really want to see those buyers, right, take this thing and run it higher. Now, what about the sellers? You know, tomorrow's a big news day. What would it take for the bears to take control? It would take some strength. We have to see a strong move down and then hold the pullback, right? If the bears can show us some strength, strong move down, hold that pullback, then we know they're hunting.